Hi, this is Jasper Basson here. I've recently done a cash flow projection workshop with a South African group in South Africa. In this workshop, I covered cash flow statements and then also how to combine it with your management statements of your company. And what I've done is I really fine-tuned the way that you estimate or guesstimate as accurately as possible the items in your cash flow. Looking forward to seeing you in this workshop, and if you find any value from this, please like and share this video, and also comment in the description below what are the points that really stand out for you and made a difference for you to do a better cash flow in the future. Enjoy the workshop.
Just a few points before we kind of go into the actual practical exercise of everything. But why do we actually budget? And I mean, something I've probably handled and discussed in all both session 1 and session 2 was the break-even point. So I mean, and that's very important. And again, we're coming back to the break-even point, not to the calculation. We already done the calculation, but to get to why did we do that is to get the actual sales that we need to do to break even. And today we're going to use that as well as part of our budget to obviously incorporate into that. Further on, making sure we make provision for the monthly overheads and other obligations every month. I think that's ultimately the logical reason why we do a budget. It's also a prediction of the potential profit of the company, and then also how I use that profit to build the net asset value of the company. So what will I do with that profit after I actually made a profit, and how will I invest that? Could be part of our budget, and then predictions and planning for the potential slow months. And certain business can be very sensitive to that specific season. So if you have very high seasons and very low seasons, I mean, some industries are very bound to that. Then we need to make a provision in the budget for those better months, and then obviously make provision for the slower months during the course of that. Have a specific plan of where would I put some extra cash into a call account or shares or whatever the case may be for my company to make sure I can tap into that in the slower months. Are we going to incorporate everything into this mix? So there's, like I mentioned, I want to incorporate the cash flow into the management statement of everything. So I'm going to use my profit and loss of my accounting system that I've obviously done. I'm going to use my budget that I've prepared, and then I'm going to use some previous year figures as well as related to the previous year, the same month of this year, of the previous year. I'm going to use that as well. So I'm going to have 3 comparative figures for each month. I'm going to have previous month, current year, and then also the budget for that specific month to compare. The history is not necessarily, I don't really care too much about the history, but it's also great to compare it with my current month and see if my company actually grew in sales, in how did I manage my expenses, and that also linked to how do I manage my expenses to my budget. So everything kind of linked to each other. Right, and then in my example, that is going to be, I tried to keep it as short as possible in the sense of the items that I chose. So obviously you will have a lot of more variables in your business potentially, but that's something you kind of discuss and brainstorm about. But just to give you a few ideas of how will I actually do my budget? How will I actually prepare it? So for debtors and creditors, you will I assume you do a proper accounting system. We have proper debtors, proper creditors. You can provide yourself, and for me, with a H analysis of current 30 days, 90 days, etc., whatever terms might be. You will know exactly on those terms, and using that, you will be able to understand when potential cash might come into your business based on your H analysis, and also when you need to pay creditors. So I know on 30 days there's 100,000 rand on various creditors on 30 days, and I know exactly when I need to. In 30 days, I would have to pay 100,000 rand to those creditors. So that you can incorporate into your cash flow, that you know exactly what months I would potentially receive income. And then obviously additional to that, any potential cash projects that you might have that at these months I will receive money. And the expenses, I will go back to my previous financial statements. I'll go to my previous P&L of a previous year, profit and loss, and I work out my main expenses. I work out the percentage of that connected to my turnover. So what percentage of that expenses might be from the turnover? And most expenses, even salaries, but salaries, bank charges, telephone, fuel, all those things are generally linked, advertising linked to your turnover. Because the higher the turnover, the higher potential that you obviously employ more people and have more expenses, more cash has been banked, so your bank charges would be more, all those kind of things. Then just a few additional questions that you need to consider. Will I receive a capital? Will I receive any capital amount like loan applications? So will there be a loan application and I will receive that loan, let's say in the next month? I need to incorporate that. And then what capital items will I repay back? So hire purchases, so all your vehicle finances, those monthly repayments, that business loan that I just mentioned potentially on the top, that obviously next month there need to be a repayment. And then also obviously every second month you have your VAT payment, so you also need to make a provision for that. And like I mentioned in the previous, that very first workshop is how you actually can manage that VAT, and you can make a provision in your budget for, I will need to make a provision for this, and I need to every week need to set aside that amount of VAT into a call account or something that's separate from my business. And then, like I mentioned, the previous year management statements can be a very helpful guide for your monthly overheads, obligations, and working out percentage of expenses to turnover. So everything of that we will try to incorporate into our cash flow. So if I head to my cash flow, I actually use I'm trying to use the management statements and the cash flow of a specific company that we can do a good comparison. So in this case, I kept it very simple because obviously it's just purely for as an example. But in your case, turnover, you would obviously go back to your previous year as well. Go back to your monthly management statements, and you would know if you're a season-based company, if there's certain seasons, certain months that's more, you will need to kind of adjust that turnover according to those kind of figures. If you have any cost of sales, again, you have the previous year percentage of your cost of sales to your turnover. So you will see, I will just kind of have a formula in there. So 34% on average per year will be my cost of sales on my turnover. So I just incorporate that. So the moment I put in that amount, the turnover, it will automatically work out. So if I change that, it will automatically change everything below that. Right, so the same with the expenses. Again, I just add a few expenses in here just to give you an example of everything. So you need to pay your accountant 3.5 months. You know, advertising is about 1%. Again, 1% of that turnover. So I can guesstimate that. So the moment you will see everything is here linked. Bank charges 0.3%, salaries and wages 37%, which generally seem to be the average, about 30% to 40% of turnover of most companies. Telephone 1.5%, vehicle expense 5.7%. So if you note there, the moment I change that turnover of 400,000 rand, everything changes. So I can, from here on the turnover, I can pretty much start playing around. Once this is set, I can start playing around with the turnover and obviously do a proper guesstimate on that. And again, I already know my break-even point. So if I know my break-even point, I can, apart from the realistic cash flow I will get from H analysis, from potential project that I'm busy with, I can also plan in there. This is the actual turnover I need to make additional to this to actually break even as well. Right, and then obviously, like I mentioned, you might have a potential loan, so you will need to bring in the loan. There's additional to this specific month. I will have 300,000 rand inflow in the business. And whatever you need to do with that, you will also need to bring into that as working capital. So if you have any improvement, any expansion, any working capital that you need, you will put that into the into this whole cash flow as well. On the bottom, like I mentioned, we might have higher purchases. We have business loans. So here at the top, I've been approved for a business loan. At the bottom, I need to start repaying that. So I need to put in that business loan repayment in as well. And then your VAT is in here as well. Which is nice about this cash flow is I actually made provision. I already done the calculation based on the figures. So the VAT is automatically calculated here as well. If I change anything on the top here, the VAT automatically changes to the potential correct figure that I need to pay every second month. Right, and then lastly, the bank balance obviously starts at some point, and this is just an accumulation of profit, losses, profit or shortages, inflows, outflows, shortages every month for the next year. And so according to this cash flow, I should end with 895,000 rand at the end of the 12 months after I've paid all my capital repayments as well. Everything exactly after I've paid everything, that should be the profit left. And now from there, I can also, additional to this, I can start planning of what will I actually do with that 800,000, because obviously as well, I won't receive 800,000 rand in one shot. It will be an accumulation of every month. So I can, additional to this, I can bring in, let's say it's capital year, I can bring in additional call account investment or share investment or whatever the case may be, or I want to buy a new property as an investment for my company, and I'm gonna this is my new repayment, and I need to bring that into the equation as well. So you want to kind of get this amount as close to zero with filling in investments as well. Right, so once I've done the cash flow projection, this is obviously a very quick overview, but when I've done properly in detail, this will link to my management statements that I've done and with comparison figures. So every month there's a monthly one, and this one ends at February 22. So it's March 21 till February 22 is the actual applicable year that I've done the management statements. Obviously, every month I just add additional one to this. But I have my comparison figures for, this is the same month last year, this is March 21 this year, and then it's my budget figures also for this year. So this actually gives you a very, very good comparison between your previous year, your current year. So previously with my sales, I've done 458,000 rand. This year I actually done 954,000 rand. But in my cash flow for that year, I actually estimated 980,000. So I'm very close to my turnover that I want to be, and that I've estimated that. And then also, this also linked this, obviously, again, it links to your cost of sales, and it also gives me my gross profit percentage. So from here, I can actually see my gross profit percentage that I wanted to get, and I've estimated would be 66%. But the previous year I've done 59, this year I've done 57. So either my costing and my prediction of my cash flow is not correct, or somebody in my office might not quote the figures correctly, the markup is probably not correctly, or I'm just giving bigger discounts as I anticipated, or the cost of the goods has increased during the, I mean, like we see now as well with COVID and wars and everything going on, fuel prices going up, everything's going up, so the products are also going up. So that could also be the variance. So just a very good exercise to look at these lines as, why is my gross profit either bigger or smaller, and I need to investigate that if needed. And obviously the rest is also the same. So you have your previous year, current year, and your cash flow expenses, and I can do all these comparisons throughout the period. Right, in this exercise, you will see my SARS VAT was a massive difference, and that there could be various reasons for that, but that obviously is a massive difference, and I need to go see why they estimate that amount so wrong. So we'll see if you go to May month, they are closer to my budget.
Hi, Jasper Basson here. I just wanted to remind you about the Daily Entrepreneur Tips series. It's a business growth series for entrepreneurs and contains financial information and also information to grow you as a person and your business, because we will never grow our business any higher than we grow ourselves. So click on the link below and I will send you daily information to grow you as a person and your business, and it's for 365 days of the year.